all eyes would be on Wipro. The results are expected on 15th of July and expect an industry-leading growth coming in from Wipro. Yes, the EBIT margins may be in a slight pressure and the profit is seen at 2840 crore, which is down close to around 4.5% on a sequential basis. In fact, the revenue growth in constant currency terms is seen at 9.4%. This is fairly close to the upper end of their guidance of 8 to 10%. IT services revenue is seen at $2356 million, which is a growth of 9.5% on a sequential basis. The revenues include the $129 million contribution coming in from CAPCO acquisition. Organic growth is seen at close to around 3.4 to 3.5%, driven by the ramp up of the Metro deal as well as the mega deal with the US cosmetics company. Expect the Metro deal itself to contribute close to around 1.7% to quarterly revenues as per Kotak estimates. EBIT margin may decline on account of two reasons. Firstly, it is the decline would be led by the consolidation of the margin-dilutive CAPCO acquisition, and also Wipro has done good amount of wage hikes and a good amount of senior management hiring, and both these factors are also likely to impact EBIT margin. But overall, we do expect that the deal momentum has been fairly good for Wipro. At least the outlook on the deal momentum is expected to be fairly strong. If you look at the key monitorables, well, yes, guidance would be the key monitorable. Expect Wipro to guide a 5 to 7% sequential growth for Q2. This includes both the CAPCO as well as the Ampion acquisition that they had done during the Q1. This is what Kotak expects, and on an organic basis, Wipro is expected to guide a 1 to 3% sequential revenue growth rate according to Kotak as well as Phillip Capital. Besides that, of course, the commentary in terms of the large deal wins and the pipeline would be important. Large deal wins would be, of course, area of focus, especially at the completion of the recruitment of the new chief growth officer. Overall demand and the pricing scenario would be crucial, and the outlook on healthcare, energy verticals, the margin outlook, as well as the impact of high attrition overall on the margins and on Wipro as well. If you look at the stock is up 36% YTD. On a YTD basis, it has outperformed the Nifty IT index, which is up 17%. However, Wipro is down 5% in the last 1 month versus a Nifty IT, which has been flat, and Wipro is down close to around 3.5% in the month of July. The stock is trading at close to around 22x FY23 price to earnings multiple, and compare this with an Infosys trades at 26x and TCS trades at 27x FY23 price to earnings multiple. Most of the brokerages now have a kind of a mixed kind of a rating on Wipro. Ambit has a sell with a target of 410, HDFC Securities has an add with a target of 575. Prabhudas Lilladher has a buy rating with a target of 637. Macquarie, however, has a neutral rating with a target of 540 rupees per share. So yes, overall, do expect an industry-leading performance coming in from Wipro. The guidance and of course the outlook would be keenly watched out for.